Is there much left to impress investors heading into next year? Here to take on that question, Tom Lee of Fundstrat. He joins me at Post 9, also a CNBC contributor. Tom, good to see you. Thanks for coming in.
Yeah, great to see you, Mike.
So we can stack up all the positives. I mean, I know you've been kind of in gear with that idea that the economy would power through, inflation would come down, the Fed could become friendlier, earnings are going higher. Big question to me is, how do we set expectations for the year to come, given that that's all in the books?
It's a great question because, we have two back-to-back 20% years, and now investors are wondering how much good news is baked in. But if we look at the 2025 environment, it's a great setup because we have a new administration coming in that's maybe pro-animal spirits, a Trump put. We have a dovish Fed, and as you're pointing out, interest rates are kind of calming down after rising. And we know there's still $7 trillion of cash on the sidelines, and I think sentiment's coming back into check. You mentioned that before with the AAII numbers. So I think it's a good setup for investors. I wouldn't be too worried about the next 12 months.
So don't be too worried. I mean, it seems as if there are all these supportive factors, and when you mentioned the 20% up years in a row, history says actually, the following year is up more often than not as well. What do you mean, do you think, specifically by the new administration being pro-animal spirits? First of all, it's true.
Yeah.
You've kind of seen it at work. It seems to pull in that direction, but are there specifics that the market is fixated on that it's going to drive that dynamic?
Yes, I think that the market's trying to figure out exactly how this animal spirits plays out in markets, but I would say we've got a Treasury Secretary that equity markets approve of. We do know that the last Trump presidency cared very much about what stock prices do, and Jeremy Siegel said this is the most stock market focused president ever. And I think that the uncertainty is around trade and the potential risks around tariffs, but we'll have to see. I mean, that's something markets are going to have to deal with it from an uncertainty perspective.
It's interesting to me that, the way the market has behaved in the last several weeks, but even going into the election, was we need to own more cyclicals, we need to own more financial stocks, we're going to reprice this market for maybe a growth acceleration even, or at least maintaining above trend growth. Meanwhile, though, we're only a couple months removed from a pretty big growth scare. Job growth has kind of slowed to a point. The housing market seems pretty locked up. It's kind of interesting how the sentiment has kind of jumped ahead. Is the economic numbers positioned to actually validate that view?
Markets tend to be forward-looking, so I would expect this. I know there has been a recession in durable goods and in housing and auto sales, principally because of high rates, which have made affordability an issue. That's really on the come next year. I mean, I think the spread of 10 years and mortgages should come down, and the 10-year hopefully behaves. And I think if there's more confidence and more supply, I think housing actually could lead this recovery. I mean, I think that's why home builders actually started to act better this week as well.
In a market teeming with giants, an unexpected contender is gearing up to take the lead. Nvidia, a name synonymous with high-end GPUs and artificial intelligence, is on the brink of achieving something monumental. While Apple and Microsoft are hovering around a $4 trillion market cap, Nvidia seems poised to surpass them all. At least that's the buzz stirring among market analysts. The company's latest offering, the Blackwell GPU architecture, is set to redefine industry standards, creating ripples of excitement across the tech sphere. But what makes Nvidia the dark horse of this race? Let's delve deeper into this unfolding narrative. Welcome back, everyone, to Investocracy.
I guess the question is, if we believe it's still a supportive environment, then pretty much all the things you can identify would suggest you shouldn't be too worried about next year. The second question is something like the S&P 500 the best vehicle to capitalize on that?
I think investors are still trying to figure this out. We did a survey with our institutional investors and our RIA clients last week. The majority of institutional investors don't think FANG is the leading trade. They're actually betting on cyclicals. But if you look at the RIA world, the majority are betting on FANG. So I think the market is still undecided whether to be long the Mag 7 or the cyclicals. I'm inclined to be more cyclical and bet even on small caps having a very big year next year.
As the stock market buzzes with new developments, Nvidia's story captivates watchers with a touch of suspense and intrigue. You see, in the grand theater of the stock market, the plot twist can be as unpredictable and wild as a bull in a china shop. And Nvidia seems to be that very bull right now, a behemoth charging towards an ambitious $4 trillion market cap. But how exactly does Nvidia plan on reaching this colossal figure before its tech rivals its larger-than-life market cap competitors, Apple and Microsoft? The key lies in a single word: Blackwell. Named after the revolutionary GPU architecture, Blackwell is Nvidia's ace card, promising to run trillion-parameter large language models at up to 25 times less cost and energy than the previous Hopper architecture. It's a marvel in technological advancement. Jensen Huang, Nvidia's CEO, described the demand for this chip as insane, and industry insiders have shown no signs of thinking otherwise. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
This is another buying opportunity in our view. 2024 has proven to be a year where the market's been strong and it has eluded many opportunities for sustained weakness. I know yesterday's pullback was really painful, but to us, I think the fundamental supporting stocks are intact, and I think it's a good opportunity for investors here.
A good opportunity for investors. Jeff, I take it that you feel is differently putting it too strong?
Well, I don't disagree with Tom on the fundamental side of it, but I think if you look at where we're at with the interest rates, what's on the horizon from taxes, tariffs, and deficits, I really have to be considerate of what happened yesterday. It was the second largest move in the VIX we have seen. And historically speaking, Kelly, Tom is right. A month after that spike in the VIX, you see the S&P 500 higher. However, I don't think we can lean on history here due to the fact that we've seen stretched valuations in the top 10 names of the S&P 500. We've also seen just a straight line up. If you look in the last 2 years, back-to-back years of above 25%, we've become conditioned that the market is just going to continue to move higher, thanks by and large to the Fed dovishness in their $7 trillion balance sheet. So I'm looking, I know Tom wants to back up the truck here. I have the truck running, but I'm not ready to back it up yet. I want to see this more process, reset valuations. I think that's going to be the next couple months, possibly the first quarter, because we've become too conditioned, Kelly, to markets repricing in a day. I have to go back to my 30-year career and understand that we will see reset valuations more of a quarter or two, not just a day or two.
The Blackwell excitement is timely, coinciding with what many view as a slump for both Apple and Microsoft. Apple's newest generative AI capabilities haven't stirred the desired upgrade frenzy, with a survey from sellcell.com revealing that 73% of iPhone users felt the AI added little value. Meanwhile, despite a potentially strong showing from Microsoft, there's skepticism over its ability to catapult to market dominance with its upcoming releases. This sets the stage for Nvidia's Blackwell to shine. As per Beth Kindig from IO Fund, Nvidia's shares could skyrocket by 70% in 2025. Although that is a bold forecast, it plays into larger expectations of Nvidia reaching and potentially exceeding the $4 trillion valuation, possibly eyeing $5.6 trillion. If Nvidia's Q1 forecasts and sales align with these expectations, we might witness a historic climb in valuation. Amidst all this, even investors who might typically play it safe are considering a stake in Nvidia simply because missing out on this chip boom feels akin to missing out on the likes of the Windows 95 launch or the debut of the original iPhone. With analysts rallying around this vision, Nvidia is no longer just a tech company. It's transforming into a cornerstone of future AI infrastructures, a company building tomorrow's technology today. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
You say you saw signs of capitulation yesterday as it was a 90% down day.
I did, Tyler. As context, the market has been bleeding lower. If you look at internals for the last 10 days, yesterday looks capitulatory because not only did we have a 90% down day, but the VIX, the spot VIX, exploded by 75%. There's only 4 times in history where it's risen 60% in a day. So yesterday was the 5th time in its 35-year history. Of those 4 times, the market recovered all of its losses within a week, 3 out of the 4 times. The fourth time it took a month. So I think what you had was people panicking to get out of what they thought was a momentum trade that's ending because we're so close to year end. But here's the interesting thing. The forward VIX futures curve barely moved. So it was almost as if people were seeking protection through the VIX yesterday.
As we wrap up this fascinating narrative, it's clear that Nvidia is at the cusp of something potentially historic. With Apple and Microsoft temporarily stalled, the path might be clearer for Nvidia to rush ahead. The current standing of their stock, though not indicative of guaranteed future performance, reflects an underlying expectation of monumental growth spearheaded by the Blackwell architecture. If Nvidia capitalizes on this momentum, its valuation is not just set to reach $4 trillion. It's poised to potentially break further records and extend beyond, inching towards $5 trillion. A stock market journey such as this doesn't just change portfolios, it reshapes technology landscapes, fulfilling both investor and consumer anticipation alike. But what do you think? Can Nvidia sustain this pace and reach these staggering heights? The stock market might be unpredictable, but it's this very unpredictability that keeps us engaged and invested in the stories it unfolds. We'd love to hear your insights and predictions. And finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.